who is Sompo International? Sompo is not a name that you hear quite often until really, at least from a contract surety standpoint, until really you got involved, at least in the Texas region. But then also, if you can kind of elaborate a little bit more on what your role is as far as reading and everything else.
Yeah, so I graduated from the University of Texas in Austin, and since then I've been an underwriter for 13 and a half years. 11 of those years have been in the surety industry, and I actually started in San Antonio, Texas with CNA Surety back in 2009. And that is when the recession, the 2007 to 2009 recession, really was coming to an end for contractors. It didn't really feel that way, and for a surety underwriter to first embrace that time period, it allowed me to see a lot of things that you typically wouldn't see, especially within like the last 5 years. So as for Sompo International, we are a top 10 surety. We're actually a global company, global insurance company. We are based, most of our insurance products are based in New York City and Manhattan. Our surety division is based in Nashville, Tennessee. And from a surety market point, we target contract surety. We also target commercial surety. We work with environmental contractors. We work with oil and gas clients and waste clients. So, if there's a surety bond need, we're a market that will evaluate it. So I joined Sompo a year ago as vice president of the Southwestern United States. My goal is to really assist our agents with their book of business. My background is mostly construction contract surety, but as I just said, if it entails other types of surety, I can assist in that area as well. So basically what I've seen so far in like the last month is, Goldman Sachs has come out and said that we're in a recession, global recession. Morgan Stanley has come out and said that we're in a global recession. And anytime recession is mentioned, I go back to my early days of underwriting from 2009 to 2011. And something that I learned back then is that the construction industry really has a 12-month to 24-month delay in being impacted from a recession. And so the benefit is, if there is a benefit of recession, is there's some time for contractors and sureties and agents and bankers and CPAs to really prepare for maybe a downturn in construction. The downside is typically with recessions, there's less capital in the marketplace, and there's going to be more competition for the projects that are let in the marketplace. So really, we're just, because it's so new, we're just kind of in a wait and see standpoint to see how owners are going to respond, how private investment's going to respond, and then just really talking and listening to our agents and our clients to see how we can assist with their book of business. From 2013 to 2020, first quarter 2020, contractors were healthy. There's private investment in the marketplace. Backlogs were full. Sureties were being aggressive. There's plenty of capacity. It also seemed like there was plenty of capital. And so, really the last 15 years, the sureties have been profitable. That's really, 2004 was the last time sureties had a really bad down cycle. Even through the recession, they remained pretty healthy. And then coming out of the recession, I would say times are really good. I mean, the fiscal year end CPA statements that I've seen thus far for fiscal year end 2019, most companies are profitable. Most have work. Q1, I mean, granted, Q1's with a winter, so winters usually have less work going on, but Q1 results have been solid. I mean, I think if you asked anybody if we would have experienced this in March of 2020, 6 months ago, I think everybody would have said, "You're crazy, there's no way." So It's just kind of an anomaly of what's going on. And so And I think it's, only 4 weeks in. I don't think anybody has any answers of what to expect. It's still very uncertain.
What's going on right now, but it almost sounds like you're saying that there's a delay in when we see the effects of what's happening right here, right now.
Well, most people, most contractors, assuming that they had work, it takes on average a contractor 12 months to perform the work that they've got. So, this hit really beginning of March at the United States, beginning of March, mid-March. At that time, contractors had a lot of work, and the fact that so many cities and states and the federal government has considered construction as essential, contractors haven't stopped working. So, if you talk to contractors, they're doing well. Actually, some of them, especially road contractors, say, this is the best time to work because there's no one on the roads, and we're very efficient. So, I think 2020 results, in my opinion, should be decent. And I don't think you're going to see a lot of people all of a sudden start losing money. I think it all depends on how much work you had going into this little uncertain time. What we've really seen is owners, cities, kind of delay opportunities. So a lot of the bids that were planned have been postponed, whether they're from a state or a city standpoint, or if you're a private owner. I think people have just kind of hit pause for a second just to see how the next few months go. And it's just a matter of how much backlog these contractors had and when they'll run out and what will be available at the time that they're running out of work. So that's the big unknown.
So being 1 month into it, and I know this is kind of a broad question, and
Sure.
we could really have our own 2-hour conversation on this. But I guess as a quick snapshot, what should contractors do now to protect their cash flow and their working capital and their equity? So when they're presenting to the underwriters, what can they do now to help get them through the lull?
Yeah, well, first I would say the federal government has passed the CARES Act, which allows for the SBA to provide some federally funded loans to any type of business, but particularly contractors. And so, from a cash flow perspective, if you have high labor costs and high equipment costs, and your receivables, if they start becoming delayed, I would take advantage of those programs and at least have the conversation with your banker about how those could help shore up some cash flow. And from a working capital and equity standpoint, like I said, I think 2020, depending on what industry you're in, I think oil and gas pipeline guys, they're taking a hit. I would expect them to take a hit just because I think oil and gas prices have probably put oil companies on pause from drilling and spending money. But I still think for the most part, 2020 is going to be a healthy year for contractors that had work. And so my biggest caution is, you were thriving in 2019, you may be thriving 2019, 2020, just have a kind of a worst case scenario plan in the background for, if your revenues do get slashed, or if it becomes extremely competitive, it doesn't hurt to have kind of a plan B of how you'll respond if you do come across hardship.
So this brings up a question for me. I just shouldn't companies that are currently in the bond market and they've purchased bonds and they're doing the bid bonds, moves or strategies that you guys would suggest, like right now, knowing that we're kind of like, in a way, we could be proactive, right? Like really knowing that this is coming down the pipeline, what moves would both of you say that you would like to see our clients making to kind of put themselves their best foot forward?
Yeah, I would say communicate for one. I mean, the construction industry has so many parts, and so does a contractor. So, one part is the insurance agent. Insurance agent, I consider kind of the quarterback that gets involved, the CPAs and the bankers and the sureties. But you never know how a market's going to respond. You don't know how the banks are going to respond, given the amount of SBA loans that they're currently churning through right now, all the applications. CPAs, they've got to work from home. We don't know how long the CPAs, it will take them to produce fiscal year-end statements. Sureties, we're kind of, from my standpoint, we try to be consistent with our message. If you're open for business, you're open for business. You're going to write business. Drew, you mentioned soft markets, hard markets. It wouldn't surprise me if the market did harden, and it also wouldn't surprise me if you found sureties took this time to really go after and get quality new business. So I think it's just a matter of communicating at this point in time and just trying to gather in as much information as you can. So you can be prepared for those jobs that you want to pursue and for the requests that you may have on your bank and your surety. So
Yeah,
we're all partners.
Yeah, Eric really hit it on the head. I mean, communication is key, and what I try to push to our clients, number one is got to open up those lines of communication, and we do get a lot in bringing your financial team together. So that be your surety, your insurance agent, your CPA, your banker, and your surety underwriter. We can open those lines of communication and we can strategize, because I mean, we work in different industries kind of, but it's still there to support one cause, and that's overall success.
Mm-hmm. Drew, I was going to ask you, before COVID-19 was kind of out and causing this disruption, I know you and I had already had conversations about people who right now think that their their bond marketing is perfectly taken care of right now, that there are nuances that are going on in the marketplace that kind of make it a really great reason to, explore new bonding possibilities and what carrier they choose. What were some of the things that you were thinking about when you chose? I know Sompo International was kind of top of your mind on this subject.
Mm-hmm.
What's driving that?
Well, I mean, it's actually a perfect segue into the next couple of questions that I wanted to bring up to Eric as well. Previously I talked a little bit about the relatively soft surety market that we've experienced over the last decade or so. Assuming that there is a hardening of the market, there are going to be some changes and maybe some challenges that contractors, where they've been working with the surety for a certain amount of time, and everything is great, but let's say business slows down and there's a bit of a lag in their development of their financials, and the surety company starts pumping the brakes a little bit. And the big thing to take in consideration is what we talked about as far as steps you can take to maintain your cash flow and your working capital, improve your equity position. But Eric, with us potentially reaching a recession, from what's been said in the news at least,
Sure.
How can contractors really assure that their surety support is going to maintain a steady position? And then is there any potential of developing their surety programs, as in capacity size or terms?
Yeah, the fundamentals of surety are capital, capacity, and character. And the good thing, whether it's a downturn or a really prolific boom within the marketplace, is the underwriting doesn't really change. So we're going to request the same amount of information that we have requested in the past. And the process, is what it is. And that's not going to change at all. what you'll see change is comfort level. I mean, anytime you go from a soft market to a hard market, you'll see companies or underwriters may change their minds on their risk appetite. And really to overcome that, if you're a contractor that experiences that, I think every contractor should have their day in court. I think the first thing to do is to talk to your agent about exactly what type of bond program you're looking for, and how to achieve that. I think the agent's the first step in that process. They'll have the best idea because they know all the markets, and then from there, just kind of present yourself to the surety as you would, and say, this is what I'm looking for. This is who I am. Can I have your support? I mean, if you've been bonded by a surety for 20 years, that surety should have a lot of faith in you. If they're starting to pull back, it means either two things. One, they're just fearful, or two, there's a certain piece of information that really gives them pause. Sometimes numbers don't lie. If the numbers are what they are and they're pretty bad, that can be tough to overcome unless you get some financial assistance. But if you're on the fence, my recommendation is to try to provide as much information as you can, and really just try to sell yourself. How long you've been in business, what the next 6 months look towards, the changes you've made since the downturn began, assuming that there is a downturn moving forward. If there's fewer jobs in the marketplace and your results do start to trend poorly, voicing the changes that you've made to your operation and your company go a long way. I mean, a lot of the surety's analysis is whether we believe the company has proper management and good management and is decisive. And so, I think if you provide the information and really sell yourself as to your capabilities, I think sureties and agents will give you a listen.
Yeah. And then one thing that we do actually work really hard on at IBTX is, we work really hard in building out our network of support, right? So when a contractor comes to us, we've gone through it all. We've seen the hurdles and the roadblocks that the contractors see day to day. And ideally, we want to get them placed with, not only with the right surety market to get them the support that they need, but make sure that they do have a CPA that's construction oriented, that understands the construction accounting, and then get them lined up with a commercial lender that understands construction cash flow, because that's a totally different animal than what retail cash flow is, right? Yeah. So you want to be able to build that. We can help contractors build their teams, and really help them with the presentation financially, to where it kind of slows down any of those questions or hesitations on getting approvals that they need.
So do you guys, I'm curious, as someone who, we meet so many business owners that I'm on the insurance side, but from a surety point of view, is this a good time for people to consider doing some submissions and sharing, like maybe moving now and like showing, like at least exploring what's going on with you guys and
yeah, I mean, I don't think it's bad to communicate. I mean, if you've been with a surety for 20 years, that surety should take care of you. I mean, if they don't, like I said, there's got to be a good reason why they're not. And your insurance agent would know that first. But yes, I mean, it's never too early to communicate, and that's part of, hey, this is what I'm looking for this year. These are the jobs I want to go after. In the last 20 years, I've been a good client of yours. Can you help me out? So, I mean, that's one scenario. The other scenario is, we're seeing, at least within the last month, we're seeing some contractors that have never needed a bond all of a sudden apply for bonds because they've been used to private work. And some have come from the oil and gas field, and they're going into municipal pipeline work. And that's a different scenario. I mean, when you've never needed a bond, you do need coaching. You need that solid agent to come in and tell you, this is what we need, this is what you can expect, and these are the markets we're going to go towards, and see if we can get you support. Whether it's a backup file or current file, I think the activity increases just to make sure that the contractors and the clients do have a solution if and when needed.
Yeah,
So-
I would agree with that there too. Like my thing has always been, have a backup for everything. Whether that be a bank, and for our clients, having a backup surety is also really important as well. So even exploring that sense on just making sure that there's additional support where needed, or even for the additional input. I mean, there's a lot of power in that. That's really important. And to also reiterate what Eric was saying on the private work side, if there is a dip in the economy, the lending institutions that are funding these private projects, the request for the contractors to be bonded and the subcontractors to be bonded back along the way, I think we'll see an uptick in that. And we need to get the contractors that are used to doing only private work and not ever needing a bond to at least being prepared for whenever that time comes, because that's a make or break for a lot of those contracts to be put in place, is a requirement for bonding. That really wraps up all the questions that I had for Eric. I mean, really, again, the concept of this is, it's good to kind of bridge that gap of communication, rather than having our contractors or contractors that may be interested in working with IBTX to remove that shadow of like, who's this mysterious underwriter that is approving all my bonds? Well,
that's a guy with the 80s hair that's
right.
pounds.
So I mean, what's important here, and the concept of this to me is like, we want to show the construction market, hey, we're all wanting to get together and work as a team to help everybody through this. And there are creative solutions to get by. Obviously, if it doesn't make sense, it doesn't mean that we're not going to answer the phone call ever again. The idea is to help you develop and get you to where you need to be. So Warren, I think I'm going to start with you on this. The final call to action for this, being the surety layman here, what are the takeaways from this, you think?
I mean, number one, I would say, I think the information I just heard is pretty positive, which is that right now it's not like the sky is falling. People have runway, right? And you got to be strategic, and you need to really deeply consider what are your options and what are you doing as far as mitigating or reducing your exposure to the financial, stressors that come with kind of having the world shut down. We've all hit a wall. So that was kind of the one thing that I found really benefited me. And I know a lot of my clients will enjoy hearing that. And I think it's helpful. But more importantly than that, it almost sounds like it would actually be a good idea to work with you guys and just take a look, right? It almost sounds like, if you really want to look at the next 18 to 24 months, even if you've had a long relationship with somebody, a carrier doing your bonds, there's actually a good strategy in having an ulterior or alternative option in the case that you see any reductions from the financial strife that some of these carriers may or may not experience, and kind of in front of that. How is that answer?
Yeah, that was good.
That was good.
So Eric, switching over to you, what should contractors take away from what we discussed today, you think?
Yeah, communicate. Seek counsel. You've got business partners, bankers, CPAs, attorneys, insurance agents, and then sureties that are willing to give you insight into what they're seeing just across the board. And so, it's just an unusual time. The amount of information you can gather and the amount of information you can communicate, I think, is only beneficial. So that would be my only call to action. I wouldn't jump the gun on anything. I would just kind of take it all in and see what's going on. Yeah. And then have a prepared plan, just in due time, if you do find that the economy is actually on a significant downturn.
Yeah, I like that, and I really want to reiterate the important side of communication and open those lines of communication and preparing. And I mean, and so someone brought it up to me not too long ago. I was putting together that article a couple weeks ago. How often do we not see business plans from contractors? We do see them. But it would be the importance of updating that annually and working through that. You got to have a clear direction that you want to take your company, and you have a lot of tools to your disposal. While you may not, you either know it or you don't. Through your surety agent and your underwriters and your bankers and your CPAs, you got to utilize those tools and that network that you have built to help you with that, and because all of them working together is only going to increase your odds of success. The couple other pieces of notes that I put in here, Eric, did mention that, especially through a time of uncertainty, sticking with what you know is extremely important. Right now, if you're a site work contractor, right now is not the time to go to finish outs. Stick with what you're good at. It's easy to forecast. What future work looks like and what your financials look like. And it helps you wrap your head around the planning that it's going to take to push through a bit of a downturn. And finally, the necessity to be proactive versus reactive in the situation. I think historically, and Eric may agree with me here, contractors are typically a little bit more proactive than reactive when it comes to tough situations. The more time you can put into it now to put together your game plan and your business plan to move through this, the better it's going to be. And the ones that do take the time now, that are getting after it right now rather than waiting, are the ones that reap the reward at the end of it. Because there is with these tough times, there is a lot of room for opportunity. And you have to be prepared in order to have access to that opportunity. And we definitely want to be that conduit to help you. Eric, thank you so much for taking the time and doing this. This has been great.
It's just good to see your face. It's been too long.
Well, you're probably the one person that said that yet. So.
Well, thank you guys. What I'm going to do is I'll make sure that in the show notes we put all of the contact information for Sompo International and you, Eric. Sure. And of course, if there's any additional stuff you want us to add, we'll do that too.
Great.
Great.
All right.
Appreciate you guys having me on. Thank you.
Thank you.